Hello there. Welcome to the Open right here on BNN Bloomberg. Let's get to the big stories we're bringing you from our newsroom. Canada's monthly GDP fell 0.3% in October, according to Statistics Canada. Industry accounts for October pointed to a broad decline in goods-producing industries, led by a drop in manufacturing. Other sectors that saw a drop include oil and gas, mining and construction. Wholesale and retail trade also fell in October. Year on year, GDP rose 0.4%. Copper hit a fresh all-time high above $12,000 US a ton. Severe mining outages and trade dislocations linked to US tariffs have put the crucial industrial metal on course for its biggest annual gain since 2009. The impact of these tariffs on global trade flows has been so extreme that prices have rallied, even though underlying usage has deteriorated rapidly in China, which consumes about half of the world's copper. US GDP rose at an annualized rate of 4.3% in the third quarter. The economy, in fact, expanded at the fastest pace in 2 years, bolstered by resilient consumer and business spending. This follows 3.8% growth in the prior period that was bolstered by households and a contraction in the first quarter. Looks like we are going to get a slightly weaker open for U.S. stocks this morning. Let's see how the TSX traded yesterday. Of course, it got yet another boost from gold stocks, closing in record territory. The index closing in record territory yesterday, just above 32K. Let's have a look at oil this morning. Oil has been bouncing back from those multi-year lows amid speculation that America is going to step up its attacks on Venezuela. And let's see where gold is. Gold hit record highs today, and it's in record territory again today. The February futures north 4,500. And let's check out our dollar. The Canadian dollar slightly stronger as well, getting its snout above 73 cents US. And finally, let's have a look at Bitcoin, the biggest crypto. And you can see it's drifting downwards today, down about 0.5%. As we near the end of 2025, the TSX has been hitting record highs. And our guest says the Canadian economy has shown resilience towards the end of the year, but we're not out of the woods yet, with those CUSMA renegotiations fast approaching in 2026. We're joined by Sadiq Hadashia, Chief Investment Officer at BMO Asset Management. Sadiq, start off with the market, if you would. Not a bad year for the TSX.
Yeah, absolutely. And thanks for having me. It's been a great year for markets generally. Canada, international markets, both have done exceptionally well, outpacing the U.S., which is kind of contrary to what you've seen over the last 2 or 3 years, if not longer. So definitely, a very healthy environment for markets, despite a lot of potential noise throughout the year, whether that was on interest rates, inflation, or of course tariffs. So overall, a very, very good year.
Let's have a quick look at the TSX over the past 5 years. Turn, though, now to the domestic economy, because we know there's going to be headlines anyway over the renegotiation of this free trade agreement that could worry investors.
Yeah, I think if you think through, Canada's actually been relatively resilient as well. I mean, this is a term for every market, to be honest with you, and every consumer. But Canada in particular, as we go into next year, we're going to need to see growth continue on. We need to see consumers continue to spend. But the concern is that with the CUSMA deal, a lot of companies are going to be really holding back some of their investments until they know exactly what that deal looks like, so they know how to properly invest, whether to add more bodies and resources. And until that point in time, I think they're going to stand a little bit on the sidelines, which is going to impair the growth trajectory for 2026 for at least the first half of the year. And then I think you get some solid, upside at that stage once you get clarity, no matter what that number is. And hopefully that will be a pretty good scenario on the tariff side, but it likely won't be as good as what we have today.
And the banks. I know we talk about them endlessly. They've been hitting record highs. Sadiq, remind us: are you overweight or underweight the Canadian banks?
Yeah, we're overweight financials more generally, Canada, U.S., and globally. And the rationale really is that we think that the macro background here is really favorable for banks, the steepening yield curve, for instance. And so that should generally result in good earnings. And we have seen that coming through. We've seen, loan loss provisions come down. Dividend yields have been going up. So all of that bodes really well. And that actually ties to a theme of ours that, in 2026, people will be looking more for dividend-oriented strategies, whether that's covered calls, dividend equities, or higher-yielding bonds as well, as total returns this year will be made up more so from dividend yields than what we've seen in the last few years, where we've seen double-digit returns, and a lot of that's being tied to the growth part and less on the dividend yield. So I think 2026, that dividend yield makes a higher portion of total return, and you like to see more money moving in that direction.
You don't think there's an AI bubble, but you say not everybody's going to be a winner here.
Yeah, so there's two things on the AI bubble. So we don't think it's an AI bubble, but we do think there's a lot of people who believe in the AI concerns regarding a bubble. And that noise is likely not going to go away. And that's what we've seen in November. We saw a little bit of that in December. And that's caused angst amongst investors and markets. And that's what causes the higher volatility that we see, because it then asks the question whether valuations are justified, whether the broad indexes that have a lot of these big heavyweight names in it are overvalued. But I think that story is going to continue in 2026. And so despite the fact that you're going to have this noise, I think you still want to be investing in these areas, but you also want to be broadening it out amongst other sectors as well. So other areas that win off the AI play, not necessarily the first order of the AI story.
You're thinking, I presume, about electricity generators or suppliers of electrical equipment?
Yeah, that's right. Right. So, right now, for the last few years, it's been the chips that have done exceptionally well. Now the data centers along the way. But I think if you think about it, is what are the companies that are going to be using AI, and are they going to be able to increase productivity and efficiency so that they can keep margins higher up and cost pressures down? Then those are the areas that can do quite well, and particularly those that had low margins initially, that are leveraging AI to increase those margins dramatically. So I think that's why we think it's going to be a broader sector story than just AI and tech.
What about oil and what about energy? Are you overweight energy right now, Sadiq? Crude has been a tough asset this year.
Yeah, unfortunately, we're not. I think you're stuck in this range here between, call it $55 and $65 a barrel WTI. I just don't see anything catalyst that's going to drive this higher, for an extended period of time. Supply is still, higher than expected. Demand is not as strong as expected. Those imbalances generally cause, oil prices to come down. You can see by the chart you're showing up here that, oil prices have been down for quite a bit of time. We might get the odd surge, when we have like the Venezuela situation, or we get situations popping up in the Middle East, or some temporary boost that we might see. But those are not long-lasting things. And so they're more trading patterns than they are long-lasting strategies. And for us right now, I think we still want to be a little bit more bearish on the energy side. That being said, we do think that a lot of that negativity is already priced in. So I wouldn't want to be too underweight the energy stocks at this stage either.
Sadiq, before we let you go, do you think there's one thing in 2026 that may catch investors by surprise? Is there anything that you can think of that the market is discounting unduly right now?
Yeah, I mean, there's a couple of things, to be honest with you, and some of these are more on the risk side. I think the market is still underestimating, the consumer strength. I think the story has always been that consumer weakness is going to continue on, and we're going to see a lot of job losses. I just don't see that happening. I think you see job losses at the margin. I don't think you see a lot of job growth. but you think consumers are still going to be spending, especially the higher end side, which still drives about 50% of the spending. And if they continue to spend, I think we're going to get a surprise, in terms of that, which should lead to a better than expected GDP growth in the U.S. So I think that's one positive surprise. And on the negative side, I think the key is that the interest rate situation in the U.S. is still quite uncertain. We expect at least one rate cut next year, but there is possibility that we could get a tariff situation that blows up again, inflation that starts to go a little higher than expected, and that would cause obviously all bets off by the Fed. And that could cause, some uncertainty on valuations as well. So there are, risks on both sides there that I don't think are fully priced in by the markets.
Thanks very much indeed, Sadiq. And if we don't talk to you again in 2025, have a great holiday and a wonderful new year.
You too as well. Thank you.
Sadiq Dashia joining us there, and he is Chief Investment Officer at BMO Asset Management. Coming up, Canada's GDP slipping in October in line with expectations. But we're going to look back at the year that's passed. In fact, our economy held up surprisingly well. We'll be right back. Canada's GDP slipped as expected in October, but their early reports from StatsCan indicates that there was a slight rebound in November. So once again, our economy showing resilience despite the uncertainty over U.S. tariffs. Let's get more from Mark Parsons, economic researcher at ATB Economics. Mark, great to see you again. Thanks very much for joining us.
Yeah, thanks for having me, Andrew.
So October saw a decline, but fascinating that November, the economy holding in, according to the early estimates.
Yeah, I mean, look, we had that big bounce back in Q3, and we were told, hey, don't get carried away. This is just, there was a decline in imports. There's some wild trade numbers. And Q4 is looking to be pretty flat by my estimates. We had a negative 0.3, and then looks like an advanced reading of 0.1 for November. So we need actually the economy to do some work in December to get back into positive territory. So it looks pretty flat, and that's exactly what Tiff Macklem was warning about. Let's not get ahead of ourselves. The message has been more resiliency than recession, but we're still in the middle of a trade war, and Q4 is looking to be pretty flattish by my estimates.
The big story this year, of course, has been the slide in Canadian interest rates, but the Bank of Canada appears to be done for now.
Yeah, we're not expecting much from the Bank of Canada. They seem happy with where they are right now at 2.25. They're keeping a close eye on inflation, which is still a bit too high for comfort. That core inflation rate's sitting more like 2.5% to 3%. So we think they're going to be content to be on hold. The economy, as I said, has shown a little bit more resiliency than they were expecting. And still, they're still at the low end of neutral at 2.25. So they're not going to be in any rush to cut unless we see some really weak numbers. If anything, we're now starting to talk about a potential rate increase in 2026. Our forecast is that they're on hold for obviously the rest of this year, but next year as well. And then maybe looking to raise rates again in 2027.
Well, that's interesting. Of course, nothing is certain. I suppose an inflation scare could get them raising rates faster. But you think on current indications, they stand pat through 2026?
Yeah, I mean, look, the economy has been, I think, stronger than most expected. I don't see an emergency cut coming. They're still in the renegotiations on the CUSMA. So there's a lot of work to do on the trade front. But the economy's been holding in there better than I think many expected. And inflation is more or less cooperating.
You have a fascinating chart for us here, Canada's merchandise exports. And going back to the start of 2017. And we can see energy products, which are the orange line, climbing steadily, but stagnation on other goods.
Yeah, I mean, this is just the reality of our trade situation. We've had a lot of exports coming from the energy sector with transbound expansion happening. So oil shipments are increasing to the Asian markets. We see more progress with LNG Canada Phase 1 and then potentially Phase 2 and other projects. So, I mean, if you look at the MOU that was signed between Alberta and the federal government, I think this is an acknowledgement is if we're going to double non-U.S. exports over the next decade, how are we going to do it? The energy sector seems like a really good candidate. And the track record for energy is actually quite strong relative to other exports.
But isn't that disturbing in the sense that the population is in central Canada and doesn't benefit directly from energy exports?
Well, exactly. This is why we need a trade deal. I mean, you have under pressure steel, aluminum, auto sector. I think you're going to see some really cautious investment in those industries, if not outright declines, until we get more certainty on the trade front. So those sectors are very much targeted by Trump tariffs. We need a long-term deal there before we start to see some meaningful improvement.
Let's have a look at employment because it's kind of a similar story there, and you have another great chart there. Alberta's employment surging. The rest of the country doing okay. We still have been creating jobs.
Yeah, I mean, what you see is Alberta has separated itself from the rest of the pack in the late stages of 2025. Really strong job growth since September. You had summer job losses, so it looked pretty weak over the summer, and then this big bounce back. We expect that to come off a little bit because the hiring intentions aren't as strong as the employment data would suggest. But I mean, it really has become an Alberta-led story. You have over 4% year-over-year growth in November in Alberta, and about 1% in the rest of the country.
What do you think will be the surprise next year, Mark? I'm trying to guess that. What kind of is there any iceberg out there in 2026? I know the trade talks could be very disruptive, etc. But is there anything else investors should be taking account of that they may not be?
Well, if you're looking for upside, I think the consumer could come back. The retail data hasn't been very strong. You saw retail volumes decline again. So I think you could get a little bit more from the consumer. I think, a lot of people are expecting interest rates to go down further. That's not our view. We think the Bank of Canada is close to done. Maybe once people realize that we're kind of at the bottom of the cycle for rates, they'll start getting into the housing market and get a little bit more from consumers. You have that mortgage renewal cliff happening still. So that's going to weigh on the consumer. And you have population growth slowing to a crawl. But you could, if the employment data holds up, like it has been the last few months, that's where you can get a bit of a surprise in our view.
And the productivity problem in Canada, that's going to be a long, slow fix.
Yeah, I mean, look, we got some historical revisions that made it look not as bad as we originally thought. But if you look at the data in Canada relative to the US, we are lagging quite a bit. We got to fix the productivity problem. That's a pre-Trump 2.0 problem. I think it's even more serious now that we are in a trade war. We need to get that back. And what I'm looking for next year is a rotation to business investment. Without investment, we're not going to get sustained increases in productivity. Maybe we'll get some upside from the consumer, but that's not what we're really looking for in the Canadian economy. We need a rotation of growth coming from business investment, and maybe, build, baby, build, and getting these major projects accelerated. That is, some upside for next year. Next year is all about execution on some of these promises that have been made by the federal government.
Mark, thank you very much indeed.
Thanks again for having me, Andy.
Mark Parsons, an economist at ATB Economics. Novo Nordisk has won approval to sell a pill version of Wegovy. We're going to have more after the break. Novo Nordisk of Denmark has won approval to sell a pill version of its obesity shot Wegovy in the U.S. It'll start selling the product, the first of the blockbuster GLP-1 class in the U.S. in early January. It's approved to help people lose weight or maintain previous weight loss over the long term. Bloomberg's Amber Tong reports.
Wegovy and Novo Nordisk diabetes drug Ozempic, these are huge. They both contain the same active ingredient, semaglutide, and they belong to this blockbuster GLP-1 class that has become really multi-billion-dollar drugs. And Novo Nordisk also has a pill form of semaglutide that's already approved for diabetes. But this new approval really completes the quartet. This is the first of its kind approval for an oral GLP-1 pill that's approved for weight loss. And while the injectables have been hugely successful, there's been a lot of talk that an oral pill would provide a much more convenient option for patients. There are people who may be afraid of needles and they don't want to get injections. They would prefer to take a pill once a day instead to meet their weight management needs. And a pill form of the obesity drug is also much easier to transport and store because it doesn't require refrigerators, unlike the injectables. So this is really a crucial win for Novo Nordisk as it takes on Eli Lilly, its chief rival.
Yeah, and a Novo Nordisk that seems increasingly in need of a major win. Shares are down about 53% this year from the higher point a little bit earlier in February. Put this in a larger context for Novo Nordisk and whether or not this will turn its fortunes around.
Sure. Yeah. This, as we see, it seems like investors are quite excited about it, judging from the after-markets trading. And this approval certainly provides a near-term, much-needed boost, a potential growth driver. But the execution of this commercial rollout of the obesity pill would be really critical. Eli Lilly, Novo Nordisk's chief rival, also has an obesity pill in the works, and the company has said that it anticipates an approval as early as March. So Novo Nordisk really only has a few months of head start to kind of establish this market and to take lead in this really critical oral market. And on the other hand, Novo has also really been under pressure on a lot of fronts, not just from Eli Lilly. It's battling the compounding pharmacies that are selling kind of legally gray area obesity drugs in the US. And there's a crop of newly emerging companies, and whether it's startups or big pharma, that's also eyeing this huge obesity market. So there's still a lot for Novo Nordisk executives to prove.
Okay, let's take a look at U.S. futures as we count down to the opening bells. And let's have a look as well at Novo Nordisk, the Danish giant. It's actually a major driving force of the entire Danish economy right now. It's got so big. Stock up. Amber Tong of Bloomberg pointing out what a possible breakthrough they have in marketing terms with this pill for Wegovy. Can we have a quick look at U.S. futures? Not sure if we're out of time. We're going to be finding out, though, in a moment how stocks are actually trading when we come back with the opening bells. And there you have it, the opening bell action on Wall Street and Bay Street. At the NASDAQ, Quantify Funds is doing the honors. At the NYSE, it's Peerless ETF ringing the opening bell. It is time for the first 15. And let's have a look at how the big North American benchmarks are doing. I wonder, are we going to get more record highs today? You can see we are down in early trading. The TSX closed yesterday. Let me just check. Yesterday, slightly down from, a new record high, 32,000. We're now slightly down from that. So we breached 32,000 for the first time for our benchmark index. It is now down slightly. Okay, U.S. stocks now turning up. And of course, they're in the running for a record high. Today, they've had quite a rally. The U.S. stocks still down from their close of just over 6,900 for the S&P 500 on December 11th, but they're pretty close to it. Couple of stocks of interest here in Canada. Let's see how Barrick Mining is doing. Barrick Mining hitting record highs this week. Flat today. But certainly not down very much. And look at the vertical run that stock has had on the prospects of a restructuring, spinning off the North American mining operations, which are the most attractive for many investors because they bring less political risk. And here is and we got gold in record territory once again. And here's a hot stock, Aritzia, climbing to another record high. just getting the formula right on women's clothing. And it looks like a pretty broad demographic of women shoppers liking what Aritzia is offering right now. And let's have a look at CAE. You could argue that this one's in for a major boost as defense spending grows worldwide. Before you're sending a chap up in a multi-million-dollar jet, you probably want to be training him or her. And yep, record high yesterday for CAE, and sure enough, in record territory once again. And we're interested, of course, in the copper stocks today, with copper in record territory. There's a Freeport McMoran moving up more than 30% in the past year. Up next, we are going to look at what building a Canadian AI database could mean for the country. Our guest says it's an essential task. We'll be right back. Okay, we've heard a lot about AI this year. Our guest says Canada can claim lots of great scientific thinkers in paving the way for the future, including contributions to AI. But he warns that it's time for Canada not just to import AI, but to grow and to build a national AI database or a foundational database. What is that? Let's get more from the co-chair of the Council of Ontario University's Working Group on AI and a professor at Western University in computer science, Mark Daly. Thank you very much indeed, Mark.
Thank you for having me on.
Start off with your concerns when it comes to AI. I mean, you want this country to be a major player, to have independence. What is your worry right now?
It's not a concern, it's optimism about an opportunity. Canada is already a world leader. We punch above our weight in AI. We are the home of some of the scientists who created the deep learning revolution through which we're now living. And there's an opportunity for us to lean further into that and develop capacity right here in the engineering space.
So we have Cohere, a major player, and you say it's been successful. But you say we lack what you call a truly public option, a foundation model built by and for Canadians. What is that in AI terms, a foundation model?
So foundation models are the big models that are typically generalists. Like when you log into ChatGPT or Google's Gemini, you can sort of ask it any question and it can come up with an answer. And those foundation models require huge scale engineering, not quite like the Apollo project, but think on that order. And it's not something you can do one university alone or one small entity alone, but working together, you could create a training environment where you learn how to build these foundation models, and then that becomes part of the sovereign AI skill set of Canadians.
So I think your argument is we don't necessarily need to build a huge one in Canada along the lines of OpenAI or Google's Gemini, but we do need to develop the skills here.
Exactly right. This isn't about competing directly with OpenAI. That's not something for the public sector to do. What we're interested in is creating the capacity for a new generation of Canadian startups to have young, smart people who have those sort of intangible skills that you only get by building these things.
But ultimately, the technology will need the giant engines, won't it? And they'd be in the hands of Google or ChatGPT.
I think there's another path. And if you look at what came out of the G7 digital ministers meeting, you can see Canada making agreements, building partnerships where there's a world in which like-minded nations co-create the infrastructure so that we can each run sovereign AI systems. Mm-hmm. And I think Canada is really well positioned to walk that path.
Switzerland has launched a project along these lines. Germany has, and Singapore.
That's right. So this isn't something radical that I'm proposing. There are good models we can build on, like-minded nations we can partner with to co-develop this, and it's within the realm of the possible for us.
I mean, the question here is how much are we going to be subject to U.S. tech dominance? And it is a question of sovereignty.
I think when you hear our prime minister and our AI minister talk about AI sovereignty, this is exactly what they mean. They don't mean that Canada has to build everything alone in a shell. It means that we need to have the capacity to decide intelligently what we're going to buy from whom and what we need to build ourselves.
So what change in government policy do we need to see right now?
I think we're moving in exactly the right direction. This interest in building clubs of like-minded nations to create together, to share expertise, and to grow systems that we can share with each other.
Mark, I have to ask you, as a computer expert, how exciting have the past few years been with the rise of these large language models?
So neural computation is what I study. And where we're at right now is somewhere that 5 years ago, I desperately hoped we'd get here before I died. I wasn't even optimistic before I retired. And here we are now. To me, as an expert in the field, it feels like we're 2 decades ahead of schedule. So I wake up every morning and think, wow.
I got to admit, I'm a bit like that when I ask an AI engine a question. I'm pretty stunned. What will be the next thing? I mean, what about hazards? Are you worried about uncontrolled growth of AI or the thing even becoming in some way self-aware? I know we're getting into philosophy there.
Yeah, so I'm less worried than some of my colleagues, but I absolutely acknowledge their concerns. But I think this is something that we can manage as humans. We have to have these discussions. The UN is in the process of appointing a new expert advisory panel. It's tough because these discussions have to happen at the international level, and there's no international enforcement mechanism. So all of the world's nations have to be incentivized to work together. But we've done this before, we can do this again, and we're taking it seriously in the way that it deserves. So I am optimistic, but that doesn't mean that I sort of want to say, okay, everything's going to be fine. It is important for us to continue to advocate for our governments to take this seriously.
Mark, thank you very much. I really appreciate it. I hope you can join us in the new year, because we'd love to explore this theme further. Really appreciate it.
Always happy to chat. Thanks for having me on.
Mark Daly, a computer science professor at Western University. Up next, U.S. President Donald Trump speaking at a press conference at his Mar-a-Lago estate this week warned Venezuelan President Nicolas Maduro not to challenge the U.S., and he vowed to keep oil seized from a supertanker. We'll bring you more after this. U.S. President Donald Trump said this week that Venezuelan President Nicolas Maduro must not challenge the U.S., and he promised to keep oil seized from a supertanker. The Americans have stepped up their blockade of tankers going to and fro Venezuela. Bloomberg's Brian Fowler reports.
This U.S. campaign in the Caribbean continues to evolve. It started, of course, as an anti-drug trafficking operation and has now become something a little bit more amorphous. The U.S. over the weekend boarded a second vessel, a Panamanian flagged ship that had recently loaded Venezuelan oil. Apparently, it had turned off its transponder, so that's been boarded. And the U.S. is also currently in pursuit of a third ship, the Bella 1, which it has determined is not flying a valid national flag. That ship has resisted efforts, all calls to stop, and a pursuit is underway. And as we had heard earlier, Trump is saying that he's going to keep the oil. He's also threatening President Maduro not to fight back. If he fights back, he will never be able to fight back again. Trump has stopped short of saying that this is all about regime change, but people in his cabinet have been a lot more clear on that. Home Homeland Security Secretary Kirsty Noem said that this is about much more than just seizing the oil. He has to be gone, she said. So all these actions, they've been criticized at home and abroad. China, which is the biggest importer of Venezuelan oil, has criticized the actions as illegal. And then at home, Kentucky Senator Rand Paul has said this looks like a prelude to war.
Yeah, and we got some sort of immediate headlines there for what is going on off the coast of Venezuela, but there was also some announcement about much longer sort of strategic ambitions for the warships of the United States. What did the president have to say about that?
Well, I mean, he's announced a new class of battleship that's named after him. They've even got the name of the first vessel, which is called the USS Defiant, which seems, I'm sure he named personally, it sounds like. But this is all about advancing the capabilities of the U.S. Navy. This new class of battleship apparently would be firing laser beams at targets, and it's meant to make the whole Navy much more efficient, is what Trump said.
So they're going to build a so-called Trump-class battleship. Okay. I'll just let that stay there. Canada's sovereignty has faced pressure during Trump's second term. It has led, it's one of the factors leading the Prime Minister to prioritize military investment. CTV's Judy Trin has more in this report.
Canada's new government will rebuild, reinvest, and rearm the Canadian Armed Forces.
The Prime Minister's clarion call to defend against a superpower's imperialism.
What I'd like to see, Canada become our 51st state. We give them protection, military protection.
Donald Trump turned his threats into a trade war, pushing Mark Carney to turn the military into an economic shield.
I'm announcing today that Canada will achieve NATO's 2% of GDP target this year, half a decade ahead of schedule.
Carney's first budget invests nearly $82 billion in defense over the next 5 years. There's more money for recruiting, training, and equipment. Soldiers are getting raises and bonuses for serving overseas and deploying in the far north.
The priority is the defense of Canada and the Arctic. So we are investing both in terms of capabilities, but also in terms of planning and programming.
Climate change has made Canada's Arctic and its natural resources vulnerable to foreign intrusion by Russia and China. Better weapons are needed to patrol from the land, sea, and air. In the past, 75% of procurement dollars went to American companies. That's being reduced.
We're not going to be spending 75 cents of our dollar south. We'll be amortizing that money out in Canada where we can, and then spending it in other places where we have to.
The Defense Investment Agency, created in October, aims to ensure that Canadian companies benefit from big procurements, like the plan to replace a fleet of aging submarines. The Navy wants 12 conventional subs.
The reason we need submarines is very simple. It's the only technology in the Navy that guarantees that we control our waters.
That's the first one in Canada.
There are two competing bids. The Prime Minister visited TKMS, the German-Norwegian conglomerate, in the summer. Then in the fall, Carney visited the South Korean rival, submerging himself in Hanwha's proposal.
I'll be back in 60 days.
The contract, which includes manufacturing and maintenance, could be worth more than $100 billion. The winning bidder is expected to share the rewards.
Buying Canadian, both in terms of steel and aluminum. So that's not a surprise. I think for both submarine manufacturers, they would be looking at that. Obviously, the question of servicing these vessels over time. I mean, remember, this is a long-term investment. We're talking 30, 40, maybe even 50 years.
While the submarine supplier will be chosen next year, the decision on fighter jets is still up in the air. Canada has already purchased 16 F-35s from the U.S. With Trump's tariffs, whether to buy more is being reviewed.
I don't believe that we've had enough jobs created and industrial benefits done out of the F-35.
Then there's the Swedish charm offensive. The King leading the charge to pitch the Gripen fighter and offering to build the Nordic jet in Canada.
The government's steps to diversify our defense and trading relationships are absolutely crucial, but need to be accelerated.
The military budget will continue to increase over the next decade. The Prime Minister, along with NATO allies, has committed to spending 5% of GDP on defense by 2035. That will equate to roughly $150 billion a year, the cost of defending Canada's sovereignty. Judy Trin, CTV News, Ottawa.
The Open will be right back. Price of copper hitting another record high today in London. We're joined by BNN Bloomberg's Lindsay Biscaya.
Yeah, another record high, $12,000 a ton, Andy, on the London Metals Exchange. This is the biggest annual gain since 2009. So we're seeing that price continue to go up. And obviously, it's because there's more demand. In part, it's because there's more demand. We're seeing the building out of AI centers, the need for clean electricity supply, copper used for both those things. You need a lot of copper for those kinds of things. So demand has skyrocketed. But the problem is there isn't enough copper to go around for the demand that the world wants. And in part, that's because there's been some severe mine outages this year for several reasons. So we've seen flooding at a mine in the Democratic Republic of Congo, a deadly tunnel collapse at a mine in Chile, and a deadly mudslide at a mine in Indonesia. So because of those setbacks we've seen this year, that's why we're seeing kind of a decline in output. These disruptions actually accounted for 3% of lost output in 2025. That's 650,000 tons. And it's most likely that kind of lowered output is actually going to continue into 2026 as well because of these disruptions. And that's what we're seeing today, right? If the supply is limited, it takes a long time to get new mines up and running or existing mines up and running after a disaster like that, whether it be for environmental reasons, political reasons, then the price of copper is going to go up as well.
And there's always the joker in the pack, possible new tariffs from the U.S.
Yeah, Donald Trump initially kind of put this idea out there in February. So we've heard this for a while about potentially having tariffs on imports of refined copper. The U.S. is actually the largest producer of or refiner of copper, I should say, in the world. And so Donald Trump was talking about potentially having these tariffs come into play in 2027. But again, sounds like it's a while away. It's not really. And so that's stoking fears, and people are kind of driving up the price of copper and buying more of it before these potential tariffs kick in. We spoke to Gavin Graham today about that, and here's more on what he had to say.
One of the reasons perhaps for copper's particular strength in the last little while has been worries about maybe there could be some imposition of tariffs on refined copper as opposed to unrefined. We had an early flurry of those worries earlier this year after the Liberation Day announcements. So China's demand is obviously a major driver, but the fact is it's North America and Europe, again, also need lots of copper as well. And there is not enough of it around.
So Graham also saying that if people are worried about where the U.S. dollar is going in the new year, right, there's talk of even lower interest rates at a time when other countries are maybe done lowering interest rates for the time being, then that can show a bit of a lack of confidence in the U.S. dollar. Therefore, people are going to precious metals as well. That's also why we could see the price of copper going up. But when it comes to copper in particular, analysts are warning that the global copper market will face its most severe deficit in more than 20 years, with demand expected to exceed supply by about 600,000 tons. So it's likely that this is going to continue, this kind of supply versus demand issue, well into 2026.
Lindsay, thanks very much indeed. Thanks. Lindsay Biscaya. Right, let's have a look at the Canadian market. Check out a couple of stocks on the move. We'll start off, though, with our benchmark index. And sure enough, it's back into record territory. Had a record close yesterday, the first time it's ever ended above 32,000. And we're pushing higher in trading this morning. Our market so far in calendar 2025 up almost 30%, excluding dividends, 29.5%. What a run the TSX has had this year. The American market lagging the S&P 500, close to records, but up only 17% this year. Couple of stocks of interest. Strathcona Resources, the Adam Waters's energy company, has now carried out that special distribution of $10 a share, and it started trading ex-distribution today. If you're buying the stock today, you don't get the distribution, so hence the drop in the stock. And we have a takeover, yet another company coming off the TSX. There's GDI Integrated Facility Services. They're involved in janitorial services, heating and ventilation, just about everything you need to help run a building. They're going private. Birch Hill Equity Partners is the main buyer here. It is going to acquire all of the shares, other than the ones it owns, at $36.60 in cash. And you can see investors happy enough with that, bidding up the stock. Let's have a look at a couple of TSX sectors to see how they're faring this morning. With the TSX at record high levels, we'll have a look at the financials. There are the financials, and I am assuming that the banks index has got to another record high this morning. Sure enough, yep, the banks index hitting a new record high. Let's have a quick look at the energy index. Do we have time? Thank you very much, control room. Certainly hanging in pretty well, given that oil has been stuck below $60 a US. Up next, a look back at how global markets fared in response to all of those tariffs. Welcome to the second hour of The Open. Let's check out the big stories we're bringing you from our newsroom. Canada's monthly GDP fell 0.3% in October, according to Statistics Canada. Industry accounts for October showed a broad decline in goods-producing industries, led by a drop in manufacturing. There were also declines in oil and gas, mining and construction. Year-on-year GDP rose 0.4%. Holiday retail spending in Canada rose 4.4% annually, according to Visa's Retail Spend Monitor. In-store shopping dominated with 88% of the total sales, and online sales rose to 12%. Clothing and accessories sales grew 10%, leading all retail segments. Visa says AI is beginning to shape how consumers discover products and compare prices. The monitor analyzed retail sales activity between November 1st and December 21st. The Canada Pension Plan Investment Board and Goodman Group have agreed to set up a multi-billion-dollar European data center business. The Australian Industrial Property Investment Manager and the Canadian pension fund giant will initially invest close to $4 billion Australian dollars to develop these data center projects in Frankfurt, Amsterdam, and Paris. TSX hitting a new record today. Let's have a look at the U.S. markets to see how they are faring. The S&P edging higher, the Nasdaq under a little bit of pressure. Let's have a look now at oil as the U.S. steps up the pressure on Venezuela amid the prospect of more attacks on that nation. Let's have a look at gold to see how it's faring in certainly the future. February futures hitting a new high. Gold having this magnificent year. Let me just check the spot price of gold very quickly. Spot price for the precious metal slightly down actually today, 4,435, down slightly from yesterday. And finally, let's have a look at the Canadian dollar. And you can see it is strong, up about 1/5 of 1%. 2025 has featured a roller coaster ride of tariffs, with U.S. President Donald Trump hitting almost every country on the globe with levies, including at one point some uninhabited islands near Antarctica. He was going after the penguins. Everybody was initially concerned that these tariffs would slow global trade considerably, but our guest says global stocks ended up being more resilient than expected. Let's get more from Dec Malarkey, Managing Director of Investment Strategy and Asset Allocation at SLC Management. Dec, great to see you. So there was a lot of bluster over tariffs. There was extreme pessimism in April, but markets came roaring back. The levies weren't as bad as people had thought.
That's absolutely true, Andrew. So first of all, great to connect. Great to see you. And maybe to channel a Dickens novel here, it was the worst of times, but it ends up at the end of the day on somewhat of a high note. The big surprise, absolutely, this year was the resilience of global economies to all of this, and including the U.S. The one thing I think that was key there is that the rest of the world didn't really retaliate. I mean, China certainly got tough, but most countries figured, okay, if we retaliate, that may just spiral. And in fact, we're really only, putting a tax on our own people, and that's going to be bad for our economy. So that's what was the key takeaway. And the real surprise out of all of that was markets globally performed phenomenally well. And we say, okay, the U.S. was, also hung in there, but it was the rest of the world that was the big surprise in all of that. And some of it was the weak dollar, and Canada was a standout there as well. So the essential thing was companies showed that they were able to tolerate some of this. Obviously, the initial hits that were put out there wasn't as severe as they ended up being. There was also this negotiation around it, and some were rolled back and some were mitigated in some fashion. But it was an interesting outcome, and that's where we are right now, heading into 2026 on that kind of solid note.
Emerging markets are one asset that benefits from a weaker U.S. dollar in the sense that some of those nations have debt denominated in U.S. funds, and they've done pretty well this year.
Unequivocally, they actually have, and that's been a big driver. Also, rates coming down, big benefit for them as well. But all of these countries really have some, significant output. I mean, if you look at some of the top performers, like Taiwan and South Korea, they're big chip manufacturers. So it's been part of that story as well that has swept over them. And Vietnam is a great alternative to China, and with some of what's going on, that's seen a big boost. So there's been a lot around it. And then Europe had the stimulus that was coming out of there. Again, that's more obviously a developed market, but even emerging market Europe. All of that kind of buckled up, and then so just because of the AI boom as well, demand for commodities, everything again gave a boost to South America. So a lot of it was coming together. It's, to your point, amazing in a way. No one would have thought that going into the year, but a lot of those effects really came together and just created this powerful year for the rest of the world, including EM.
One theme you're looking out for in 2026 is what you call AI monetization. What do you mean by that, Dec?
Well, the thing that everybody's focused in on so far as an indicator of how AI is going is, okay, how are these guys spending? How are the big hyperscalers? Are they getting, are they seeing kind of pass through? Are they seeing some demand around it? But the big thing that investors are now saying, okay, great, we see the spending, we know this is real, or at least you guys are committed to it, but how is this going to show through in real revenue? And there's some of it coming through, but investors really, really want to see more. They're basically showing how are we certain that there's going to be a return on investment, and it's not only from you and your products, be it Microsoft or whoever. We want to see this is broadening out to the rest of the economy, because otherwise it's not going to be this home run that we're all expecting based on the valuations we're putting around it. So it's very much going to be a year where people are going to demand a proof statement on where this revenue and cash flow is coming from. And you see it where companies haven't been so clear on that. Meta and Oracle are examples in their earnings calls. this last quarter, they weren't so clear on that, and they really started to get see a discount in their stock price. So investors are already sending that signal that we want to see the pass through on this, if you will, or the results from it.
Another theme you're looking out for, and it's really a continuation of something we've had in 2025, this so-called debasement trade. Do you think there will be ongoing worries about governments racking up big debts?
It will be. That issue is not going away. And of course, you showed gold there in your intro, and silver, if you put that there as well, has seen an incredible buildup. So both of those metals, as an example, and just maybe to elaborate for a second, debasement trade absolutely is the concern about that countries do not show any fiscal discipline, and that's a problem across developed economies right now. They're not showing that. They're playing into populism and spending as much as they feel they need to get voters on their side. But part of that is also that investors get concerned about that central banks will be too accommodating, and they really won't keep inflation under control. So that now has led to concerns about, well, what's our alternative to hedge against a bad outcome there? You could abandon markets, but what investors have been doing is playing into these precious metals because they think they're an alternative, if you will, to currencies that might be inflated away. And that's why gold and silver have had a great run. Some of that is central bank demand, but a fair bit of it is retail demand that's coming through ETFs. So I think that's going to continue, the concern around that. And at some point or other, bond markets will revolt and say, no more. We're going to just start pushing prices up. There's been some, or yields up. There's been some of that happening already, but I think we're going to see more and more of that type of pushback and demand for discipline as we play through 2026.
Dec, thank you very much indeed for joining us.
Super. Thank you, Andrew.
Dec Malarkey, Managing Director of Investment Strategy and Asset Allocation at SLC Management. Coming up, robotics and AI are reshaping how food is grown. Bloomberg dives into the innovation after the break. Robotics and AI are reshaping how food is grown. Bloomberg dived into this new age of farming with an innovative robotics farm equipment company and visited a research lab to see how AI is building the future of food.
Here you go. So did you change the pump?
The pump's new yet. Burned out. Completely burned out. It was hot.
Daniel Alameda is a third-generation farmer in the Salinas Valley, where he grows thousands of acres worth of broccoli, cabbage, and lettuce, among other things. Like with any farmer, the scourge of his operation is weeds. And about a year ago, Alameda turned to a cutting-edge solution, an AI-powered weeder. The device, which attaches to the back of his existing tractors, uses high-resolution cameras and sensors to automatically detect unwelcome plants and spray them with a precise dot of herbicide.
So what the driver sees in the cab is real-time footage of what's happening. The crop that's there and the weeds that we are trying to remove. The driver sees the machine analyzing the data and then taking the shot. You're seeing decisions made in real time. We definitely had no AI not that long ago. The owner, operator, manager was the AI. We were making the decisions. But we realized quickly about 10 years ago that we could use software to make better decisions. We are trusting AI to make us better, more efficient, and faster.
We're starting to kind of notice AI getting a lot more penetration on farms across the country. Farmers are using things such as drones, autonomous plows, crop sprayers that can tell the difference using AI between a weed and a crop. And a lot of them are using data collection to just suck up all of the information from the farm. John Deere is the biggest farm machinery maker, and they have a goal by 2030 to be able to farm 100% autonomously. So I think this stuff is here to stay, and there's really not a lot of other ways to just kind of get it all done.
At UC Davis, researchers are using AI in another way. to better understand individual crop genes so they can make them healthier or more resilient to changes in the environment.
What you're seeing here, the first prototype in half a day was this thing, a bird box right now. It's one thing to collect the data. That part's actually kind of easy. You go out in the field, you collect the data, but then you generate this massive data set. It's like, imagine if you took your camera, instead of just taking red, green, and blue, which is what it does now, took another 400 bands of light. So it's this cube of pictures. And so what you end up with is this massive data set that has to be processed somehow.
That's where artificial intelligence comes in. Scientists at Davis are training computer models to detect everything from the size and shape of a flower to the direction that a leaf is pointing.
Plant breeding is really interesting application for AI. Let's say we're working on bean. In this example here, what we have is over 330 different genotypes of beans that have been planted out in a field. And so what you're looking for is like maybe some of these have really big beans or certain patterns, or the protein content is high or the fat content is high. It's just really hard to measure and see and score by humans on the ground. And then if we can process all that data using machine learning and AI, it allows us to extract those complex traits. I think farmers from 50 years ago, if they saw what AI could potentially provide them today, I think they'd be very excited. Using computer vision, we can rapidly accelerate that process of searching through all these possible children, right? The traits that we care about. And so it can take us from taking 30 years to breed the crops that we want to maybe taking 3 years. The fact that we can then take something that seems so state-of-the-art and advanced, like AI and machine learning, and bring those two together, I think there's something really magical about that idea.
What's the right time of year for me to begin setting up my raised bed nursery?
The best time to start setting up your raised bed nursery for transplanting paddy saplings.
The AI tools being created in collaboration with the team at Davis aren't just about using AI to process and analyze data. Rick and Gandhi has been building a large language model app for farmers in developing nations.
So the small scale farm we work with are primarily in South Asia and in sub-Saharan Africa, specifically in India, Kenya, Ethiopia, Nigeria. You could say that what we're building is a type of ChatGPT for farmers, but they're not looking for generic Wikipedia or ChatGPT answers. They're looking for information that is proximate to them and location specific. There's a bunch of challenges that we face. There's a need to support all the various languages and dialects that farmers speak. They don't use scientific terminologies like kilograms or percentages or chemical names. We need to be able to train these systems for speech-to-text recognition for their local colloquialisms and vernacular. And also not just speech-to-text, but also text-to-speech, so that farmers who often have low literacy can be able to interact with these systems.
Of course, AI is not without its own environmental costs, something those working in farming are all too aware of. Training a large language model can use up millions of gallons of water, and data centers dedicated to artificial intelligence can do real damage to the land and power grids around them.
These farming communities have been so often left out of our collective improvements of digital technologies. And so I think that we also have to ensure that there is inclusivity to be able to access this technology, even if there might be an expense of energy and cost for them to do so. It's about providing them more of a level playing field.
How AI impacts the environment and is that relevant to agriculture is a really important one we should be asking. On the research side, we're using, honestly, very small amounts of resources, like a few GPUs, 8 to train these, whereas some of these large language models are using more like tens to hundreds of thousands for many months as opposed to 8 hours. So I don't worry too much about our personal impacts. I know what they are. But I think like when you think of scale, like of the industry, I definitely worry about the energy effects of AI. We are at the beginning. It's moving quickly. And I think we come back and revisit this 3 to 5 years from now, we're going to be pretty blown away with the impacts that it's had already.
Okay, so what we're going to show here is, so this is the live feed from the robot, right? We have Dai here to see the shots well.
The weed-killing robot that Daniel Alameda used on his farm is produced by a company called Verdant Robotics. Gabe Sibley, who spent his early years working on the Mars rover, founded the company in 2018.
The machine knows where it is in space, so it's got spatial AI that allows it to solve the where problem. Where am I? It also solves the what problem. What am I looking at? Is it a carrot? Is it a weed? What type of weed?
Initially, people thought that autonomous navigation would be a really valuable thing to bring to the market. The thing that you have to understand is that it's not the navigation of the tractor that's the job they're worried about. It's the 100 people walking behind the tractor that are opting to go work at Starbucks or Walmart or in a data center labeling images. That shift in labor is the one that's causing them heartache. Efficiencies we need in ag are substantial. In the next 50 years, there are folks that say we need to grow as much food as we've grown in the last 10,000 years. Half of the habitable land on Earth is already under cultivation. We have to do it more sustainably and more efficiently.
What you'll hear over and over is just the tight labor market. There's never enough sort of field workers or machinery operators. A lot of farmers would not recommend their children staying on the farm and would kind of push their kids to find careers elsewhere. But these machines are also an opportunity to attract, the younger generation that's interested in video games or that's interested in new technology. And that might be a way to sort of start clawing back some of the folks from the city back to the farm.
We have just stuck our big toe in the water for the first time, and it seems like it might be inviting. It's also a little scary. We don't know exactly what's going to happen. As a species, as we start to automate all types of work, really not just agriculture, you've now entrusted all that work to a machine. And so we better make sure that we are still in control. The difficulty then is like, if the switch goes off, do we remember how to farm? We better.
Interesting how labor is a crunch for agriculture, and many farmers say, no, kids, don't go into the industry. Coming up, the ETF report, we're going to return to that theme of money flooding into emerging markets. Money has been going into emerging markets this year, and apparently a lot of professional investors, money managers, are just using cheap, broad-based emerging market ETFs as a way to do it instead of buying the stocks generally. One BlackRock fund tracking emerging market stocks has been seeing huge inflows, according to data compiled by Bloomberg. This is the $117 billion iShares Core MSCI Emerging Markets ETF in the United States. It's known as IEMG. Now, it has an equivalent here in Canada. There it is in the New York Stock Exchange. And I think I have a chart going back to its launch in Canada in early 2021. South of the border, this one BlackRock fund has taken in more than any other emerging market ETF, with more than $18 billion in inflows this year. So we've seen a move into risk assets as we close out the year. But apparently, this year has marked the first outperformance for emerging market stocks versus the U.S. market since 2017. It's interesting, though, if you actually check the top holdings in this ETF, it looks an awful like a tech fund. I think we have a chart showing the top holdings. This is in the Canadian version, but it imitates the US one. Look at that. It's dominated by Asian tech stocks. So you might think you're diversifying by going into an emerging markets fund like this, but you should check the holdings in your other international ETFs or funds may well duplicate it. So yes, there's been a big rally on paper in the emerging market stocks this year, but a lot of that is to do with the massive amounts of money going into technology names. Coming up, Canada's lumber industry has been hit hard by US tariffs this year. We'll get insight as to what we can expect in 2026. That's after the break. Shares in GDI Integrated have been soaring in Toronto today. That's after the building services company said it will be taken private. The Quebec-based company entered into an agreement with Birch Hill Equity and Gestion Claude Bigras. This is an offer to shareholders of $36.60 per share, and it's a premium of about 25% to the close yesterday. Deal is expected to close in the first quarter, pending shareholder approval. Canada's monthly GDP fell 0.3% in October, according to Statistics Canada. The manufacturing sector declined 1.5%, mainly due to a drop in machinery production. Wood product manufacturing recorded its largest decline since April of 2020, reflecting the impact of U.S. tariffs on Canadian lumber. Service disruptions due to strikes reduced activity in the public sector, and alcohol retailers were also affected, as were transportation and warehousing. And copper has hit a fresh all-time high above $12,000 US a ton in London. Severe mine outages and trade dislocations linked to US tariffs have put the crucial industrial metal on course for its biggest annual gain since 2009. The impact on global trade flows has been so extreme that prices have rallied, even though underlying usage has actually deteriorated rapidly in China. A look at the U.S. markets. The TSX did briefly get to a record earlier, now slightly down on the day. U.S. markets edging higher. Okay, let's get to the lumber sector. It's been a rough year for Canadian forest companies. U.S. tariffs, just one of the problems. One significant statistic here from our guest. In November, Canadian lumber shipments south of the border fell to the second lowest in 14 years. We're joined by Darryl Svetlashoff, Senior Managing Director and Head of Canadian Research at Raymond James. Darryl, great to see you. Thanks for joining us.
Anytime, Andy.
Kind of a twin blow for lumber producers this year. U.S. housing construction not great, and then the tariffs.
It's been a very tough, if I look back, I mean, it's been about 15 quarters now of very tough conditions. And of course, you've nailed it. Demand is weak. Our colleague in the U.S. who covers home builders has been reporting on results, and it's clear that housing activity is depressed, and at the same time, we have higher costs in Canada, a function of those tariffs that you mentioned.
The good news, if you can call it that, we've had shutdowns in Canada and what you call supply discipline. I mean, the industry has been reducing supply, which ultimately will tend to improve prices.
You've nailed it, Andy. If we look since the tariff doubled in August, shipments from Canada to the U.S. are down about 25% per month. So that's about 1 billion board feet over the fall taken out of the U.S. market. Clearly, inventories were elevated, but at some point, as you mentioned, with that kind of reduction in shipments, plus more downtime on tap here, we think it's just a matter of time before supply comes back into balance with demand, and we see prices at least come back to marginal cost of production.
And we have seen a tentative firming in lumber prices?
Prices are edging up here a little bit. Look, we think that over the holidays, we're going to see extended shuts. We've already seen many announced. Producers are going to come back to the new year. They'll check their order files. They'll test the market on demand. And look, if things are still weak, we think we're going to see material capacity shuts heading into the new year. And again, we think that balances markets, at least the hard way, through supply, not demand.
Mm-hmm. What a blow, though, for communities in BC over the past few years with the loss of mills.
It's been fairly devastating. You've seen a number of capacity shuts. All the majors have permanently closed production in BC. But, Andy, it's not just BC that's hurting right now. The rest of Canada, obviously, with tariffs are suffering. But profitability in the U.S. South, touted as a high margin region, it's not much better. You're seeing cash losses throughout the U.S. South, and we're going to have to see curtailments manifest itself in that region as well.
What equity strategy are you adopting now, Darrell? Are there forest product stocks that you'd be a buyer of right now?
Well, the good thing, Andy, is valuations are near all-time lows. So if you look and you believe, supply curtailments will bring prices up, really, we need affordability to return. We are heading into the midterms next 2 years. Is there a chance that the Trump administration does something to try to make housing great again? You could see demand return in unexpected ways. The commodity lumber producers that we like Canfor here, a good balance sheet, historic low valuation, very good margins recently. And if you really believe affordability come back, Interfor by far has the most torque. Those are our two commodity players that we recommend. However, we also cover specialty building materials distributors, stocks like Adentra, like Doman. Okay. And we recently launched on Stella-Jones. Those are actually our top picks right now, given the demand uncertainty. All these companies are looking to make acquisition. The bad macro makes their targets quite attractive, and we see them all growing their top and bottom line through M&A over the next 12 to 18 months.
That's interesting about Stella-Jones. Yeah, we think of them as a maker of utility poles and railroad sleepers, but they have a pretty big special or lumber business as well.
They do have a residential lumber business. Really, the focus for them, though, will be on growing their electrical distribution and transmission business. And
of course,
there is definitely a data center angle there that we're quite excited about.
Oh, I'd forgotten about that. Yeah, of course, anybody involved in the electricity business is getting plenty of orders these days. And Doman Building Materials, DBM, they're a dominant force in pressure-treated lumber on both sides of the border.
They are. We like Doman, high teens free cash flow yield. They have a very healthy dividend with only a 40% payout ratio, yielding over 6%. And again, they made a nice acquisition last year. We think they're going to do more good business on the M&A front and accretively grow that business.
It is interesting, Darrell, that maybe President Trump, with an eye to the voters, may want to bring housing down. And it seems like an obvious one, doesn't it? Just reduce the burden on Canadian softwood lumber, because the Americans need it. They need the softwood lumber from this country.
Yeah, they do. I mean, the bad news is we're beholden to that market. It's going to be difficult to diversify away from the U.S. market anytime soon. The good news is they need our wood. So we think that there's an ability to make a deal at some point here.
And just the economics don't support shipping vast amounts of lumber to Europe, for example. I know Canada does sell some to Asia.
Yeah, the challenge is the volume that we make. It's such a huge volume. We have massive forests. We have a very efficient, large industry. And the reality is the U.S. will be the home for the lion's share of our market for the foreseeable future.
Darrell, thank you very much indeed for joining us.
Thank you, Andy, and happy holidays to you.
Same to you, and have a great 2026. Darrell Swetlashov, Senior Managing Director and Head of Canadian Research at Raymond James. Coming up, hot picks in banks, including one that's currently sitting on about $16 billion US of excess capital. That's ahead. On Hot Picks today, we are focusing on U.S. financials. Our guest has Citigroup as his top selection. He says it's likely to benefit from several trends in banking, including expense efficiencies driven by AI. We are joined by Mike Clare, Senior VP and Senior Portfolio Manager at Brompton Funds. Mike, thanks very much indeed for joining us.
Yeah, thanks for having me.
Citi is catching your eye these days. What attracts you there?
Yeah, so Citi's been our number one pick in the banking sector for the better part of the last year, and we still think that they have pretty strong momentum into next year as well, capitalizing on the three key trends we see in the space. Number one being regulatory relief. We're also bullish on the capital market cycle, which is about 30% of their business, and of course, expense management. On the regulatory side, Citi sits on about $16 billion of excess capital currently, but we should see in the first half of next year, we should see some pretty tangible things coming out of the U.S. administration on the regulatory side for banks. Number one being reform of the GSIB surcharge, which affects the capital levels for the largest banks in the U.S., as well as we should see finalization of the Basel III endgame rule that we expect to come out next year as well. For Citi, that means they could double their excess capital levels, and we expect them to buy back a lot of stock. They bought back about 2.5% of their stock in the third quarter of alone. We could see them buy upwards of 10% of their stock through the end of next year, and notably because they traded at a discount to other banks out there, trading around book value now. They can do that on an accretive basis for their shareholders.
It looks like there's been quite a spike in Citi lately, Mike. It looks like investors are buying into the thesis here.
Yeah, I think that the market's starting to catch on. They had, they're looking at, they've been an underperformer on the return side. They've had a target of 10 to 11% return on tangible common equity for 2026. It looks like they're going to hit that. They announced an investor day for May 2026 where they should come out with new targets. So we think they should, be able to do better than expected, raise guidance, even with consensus numbers out there, having them growing earnings per share by over 30% in 2026 alone. So we think there's potentially upside there.
So the return on Citi over 5 years, about 135%, not bad, beating the financial index. But Morgan Stanley's been a charm to own. People have trebled their money in the past 5 years, including dividends. But you see more upside.
Yeah, we still see upside across the capital market space. Really, I mean, Morgan Stanley in particular has built a very strong equities business, and they've done very well on the trading side. But we're just actually starting to see an uptick in investment banking revenues, which is really their bread and butter. Investment banking, capital markets overall, up until the last couple of quarters, has really gone through quite a bit of a downturn with M&A activity running something like 30 to 40% below long-term averages, ECM activity running more like 50% below long-term averages. That's just started to tick higher. Of course, there's lots of talk out there about potentially some big IPOs for next year, the likes of OpenAI, Perplexity, potentially some others, right? So Morgan Stanley has a very strong technology franchise in particular, very strong equities business, and we expect them to be in the game on a number of those deals. Just to give you a sense of some of the numbers, in their most recent quarter, Q3, investment banking revenues were up something like 44% year over year. ECM alone up 80% year over year. And we think that momentum really continues into 2026, and there's potentially more upside to consensus as they continue to perform well.
And then finally, Citizens Financial has caught your eye. What's the attraction here with what do they do?
Yeah, so Citizens Financial is one of the regional banks. We do like not just the large cap banks. We like regional banks or some of the higher quality regional banks heading into 2026. So this is your typical retail and commercial bank operating in New England, the Mid-Atlantic, and Midwest regions. But what we really like about it is there's pretty strong visibility in terms of returns improvement into the next couple of years. So they're currently operating around 11% return on tangible equity. We think there's pretty strong visibility to improving that number to 15% over the next 18 to 24 months, just given some lower yielding assets roll off and they can reinvest in higher yielding assets given that rates have moved higher over the past couple of years. They've also done a really good job. They've been focusing on building out a private bank, which targets high net worth investors. And that's starting to have a big impact on results as well, impacting earnings by about 7% this year. That could grow to 10% next year and potentially doubles longer term. And then on the capital side, Citizens, relative to its regional peers, has one of the highest capital requirements. These smaller banks only participate in the stress test every 2 years, so they didn't participate in 2025. So when they do participate next year in 26, we expect to see a decline in that number similar to some of their peers. And ultimately, they'll have excess capital, which they can either deploy into the business to grow the private bank, or to put into buybacks. And again, this is a company that's growing earnings, something like 30% plus in 2026 and potentially another 20% plus in 2027. Trades at 12 times earnings, which is just too cheap given the fundamentals. So it's a stock we really like here.
Mike, thank you very much indeed.
Thanks for your time.
Mike Clare, Senior VP, Senior Portfolio Manager at Brompton Funds. Coming up, it's the first annual ticker challenge, or I like to call it the ticker takedown, because that's what I'm going to be doing to my competitors. The crew is putting me to the test. Who can name the stock tickers the best? I've been doing this for a quarter of a century. It's just going to be a coronation for me. We'll be back.
Hi there, welcome to our stock ticker challenge. If you've ever watched Market Call, you know when viewers phone in with a stock question, it's not magic that gets the right chart on air, it's our broadcast associates. They have to know the ticker, the exchange, and get the right graph up instantly while we're live. So today, we are putting that skill to the test. But they do have some competition because our very own Andrew Bell thinks he knows his tickers pretty well. But our BAs, Poppy and Ryan, there they are. They do this every day, all day. Okay, so this is the ticker challenge. 5 North American companies. You will name the correct ticker. Each correct answer is worth 1 point. And then for the final question, you can wager your points. So get it right, obviously you win. And if you get it wrong, you could actually lose everything. So let's meet our contestants and hear why they think they're going to be the ticker champion. We'll get a little introduction here from all 3 of you. We're going to start with Andrew Bell, because I don't think people know who you are.
Yeah, that's right. I'm new here. Yeah, these guys are superstars. They bring up the tickers reliably, fast, especially when I'm rambling. I don't know how you can do it, but they are amazing.
Yes.
You're supposed to say why you're going to win.
Oh, I am going to win.
I mean, that's
I want to be gracious about it. Okay. I want to be magnanimous, as a friend of mine used to say.
Okay. All right. Well, that's very nice of you. I don't think Poppy and Ryan are going to give you the same.
No, it's no mercy for Andy Bell for every single market update where we're being really fast with the graphs.
Scrambling.
So this is my official application to taking Andy's job.
And Ryan?
Yeah, my name is Ryan. And well, I just want everyone to have fun. Except for Andy.
Okay, so we've got a little competition here. We're going to get started. So basically, I will read out the question. You are going to have to write the ticker on the board, and then I'll ask you to show your answers one by one. And we do have a little screen right behind us here that will show the point system. There you go. You can see we're all sitting at 0, but that will probably change very soon. Hopefully it'll change. Okay, so first question is, this Canadian fintech focuses on subprime and near-prime lending. You hear about it a lot when consumer credit gets tight. The ticker for Propel Holdings. And now they're all writing. Wow, I thought you would take more time to think, but apparently you don't need to. Are we all ready?
Yeah.
Andy, show yours.
I'm going PRL.
Okay, Poppy?
I also said PRL.
Okay, Ryan?
I also said PRL.
You are all
right.
correct. I thought that this might happen.
That's a bit of a fluke.
So that's 1 point for each of you. Okay, congratulations. That's 1 down. You've got 3 more to go before we get on to our lightning round. So, second question. A Vancouver-based realtor that's gone from mall staple to a North American growth story. Everyone knows the brand Aritzia, but do you know the ticker? Again, very quick. We'll start on the other side this time. Ryan?
I did ATZ.
Poppy?
I also said ATZ.
ATZ. All 3 of you are right again. Uh-oh. All right. Third question. Congratulations. This is one of Canada's largest food retailers operating under banners like Sobeys and Freshco. What is the ticker for Empire & Co? They're already writing. Wow. All right. We'll give them a minute here. This one's a little trickier. Andy, let's start with you. EMP.A.
I did EMP-U.
Oh no! The correct answer is EMP.A. So Andy, Ryan, you get a point. Poppy, you're gonna catch up.
That was REITs.
All right. Now for our final question before we get on to the difficult question, apparently. This is the last question. This Ontario-based auto parts manufacturer supplies components to major car makers worldwide. What is the ticker for Martin Rea?
Oh, shoot. Thought it was going to be something else. Martin Rea? I've never even heard of that company.
Oh, Andy looks confident.
Oh, yeah, I know. Smug. Annoying.
Oh, yeah.
We'll give Ryan a moment to finish her answer.
Not confident in that one.
No, me neither.
Yeah.
Let's start with Poppy this time.
MR? Close. So close.
I also did MR.
MRE.
MRE is the correct answer.
You guys told Andy what they were
So annoying.
There was collusion going on.
Yeah, that's right.
Before we get to our final question, we'll just go through the points. Andy has 4, Poppy's sitting at 2, Ryan is at 3. So now this is how it works. You basically get to wager how much you want for the last question. So you get to wager how many points from 0 to all of them if you want. We're going to have you write your wager first of all. So decide how much you want to wager. And then I will ask you the question. And then someone behind the scenes, I believe it is our lovely Faith, is going to do the math to figure out who wins.
All the points I have?
If you want. You don't have to wager any if you don't want to.
No, wager them all.
Yeah. Wager them all.
Life
Go
is
for
about
it.
taking risks.
Life is short. Okay, so is everyone ready? You've
Yeah.
got your wagers? Yeah. Final question. This iconic, and the hint for this, by the way, I should have told you this before you wagered your points, but I'll tell you now. It's an American vehicle manufacturer. So here we go. This iconic motorcycle brand is synonymous with freedom and the open road. What is the ticker for Harley Davidson? And we're going to give them a moment because this is the final question. Are we all ready? Andy looks
Tentative.
Andy,
Yeah.
let's see it.
I'm going hog, H-O-G, and I'm wagering 2 points.
Okay.
He's right. I did HRD, which is wrong.
2 points. Ryan?
I also did HOG and I wavered 3 points.
Okay, it is hog. So Ryan and
where's
Andy.
She wagered 2.
We need a tiebreaker.
6 and 6. Okay, do we have time for a tiebreaker? Okay, what's our tiebreaker?
Your favorite stock?
Oh, yeah. What's Lindsay's?
What is the ticker for? Can I get that again?
I just want to
West
say that
Life.
this is rigged.
What is the ticker for Great West Life?
Okay.
Oh, okay.
All right, in our last 30 seconds.
I'm out, but
Poppy's still trying. Even.
I never give up.
Okay, you're all right.
Oh, no.
Oh,
no.
You know what? That is all the time we have. You're all winners, and we have a trophy to show you just how much of a winner you are. All 3 of you are going to have to share that. Congratulations to all 3 of you.
Yeah.
That wraps up this edition
Thanks, guys,
of
for
The
being
Open,
great
and
sport.
thanks for being here for our ticker challenge. Stay with us. We've got more coming up right after this. Congrats, guys.